Can investors be bullish about critical minerals, or will China's slowdown spoil the party? Jayant Bhandari is an institutional advisor and frequent traveler to China. Jayant, welcome to Kitco.
Michael, thanks very much for having me on.
Jayant, I want to start with a bear case for China. Disappointing GDP performance, poor consumer confidence, friction with the West, and a collapse in property prices. Can the miners rely on China, Jayant?
Well, absolutely. I don't even understand, Michael, what people mean by disappointing GDP performance. A country that continues to grow at 5% or so, despite having grown non-stop over the last 30 years, is an achievement for a country. And China continues to grow very well. I was in China just recently. I'm returning back to China in a few days. I see a massive improvement happening in that country everywhere, from consumer services to manufacturing to property development. I see positive things coming out of China everywhere. Now, I completely agree that there is a conflict with the West on many issues, but this is more of a political conflict between the politicians, mostly because I guess because of the politicians in the West who don't want to accept the rise of China and who want to interfere in Taiwan and Hong Kong issues, which is something they should have stayed away from. But also, you drive around in China and you see fabulous infrastructure having been built. You see a whole range of electric vehicles and cars on the street. Now, property sector has suffered in China. But remember, Chinese government is not interfering in the property market much, which means that they are letting correction happen and allowing poor people in the country to buy properties. So the properties are becoming more accessible to the poor people of China.
Jayant, one of the words that analysts have been using regarding what has been happening geopolitically between the West and China is less deglobalization, but the word cleavage has come up, describing how would you say markets are falling within the Chinese market sphere, and then there's also the Western market sphere. Note Solaris Resources abandoning its $130 million Zhejiang investment.
Well, from what I understand, the Solaris investment fell through mostly because Canadian government, which actually had no participation in the project. It is an Ecuadorian project with a Chinese company interested in investing. Canada was nowhere in between. I don't even understand why Canada was able to influence that investment. And I can fully understand why some of the Canadian companies want to move outside Canada as a result of that. So this is something that wasn't really an area of their influence. Now, deglobalization had to happen. We had gone far too ahead of where we should have been. Local industries are usually good. They are more accessible. In a situation of systemic crisis, local industries continue to provide you what you need. So deglobalization had to happen. But my guess is that the biggest suffering entity from that will be the Western countries, because we have offshored most of our manufacturing. Just about everything you see in front of you, what you consume today, comes from China. So for your day-to-day needs, you and I are more dependent on China than China is dependent on us. So deglobalization is going to happen. My worry is that the Western countries are going to suffer more than China will.
I want to talk about the metal, Jayant. The critical mineral sector, it has been poor. Copper had the run at, I would say, probably about the middle of this year, but it's basically back to where it started, sub $4. Lithium right now is priced below the cost it will take to actually advance a mine. We're seeing cutbacks that are happening. When does this knife stop falling in the critical mineral space, Jayant?
Well, we have to look at ourselves in the mirror when we think about when this knife will start falling. Michael, the reality is that we consume more copper today than we did 20 years back. We consume twice as much copper. In terms of lithium, we consume 4 times as much today than we did just about 15 years back. So consumption actually continues to rise of both these commodities, and it continues to rise at a faster pace than it ever did. And you can see the result of that on the street. People are using all kinds of fancy bicycles and mopeds and tripods and cars on the streets in East Asia. And as I said, I'm currently in Japan. I was in China recently, and you see that all everywhere. The problem is that we, as investors in the mining industry, tend to be driven more by greed, which means that we end up over investing in the commodities sector, which means that we keep on producing more and more at a faster rate than the consumers can consume those commodities. So despite that, all these commodity consumption continues to grow, we are producing them at a faster rate than we should have been. So we have to really rein in on our own investments and reduce consumption, reduce investment in some of these mining companies so that production falls to a more natural level.
Now, Jayant Bhandari, I followed your other interviews in your other articles, and you've had quite a strong theme regarding critical minerals. But you said something quite surprising, is that one of the things that you were most confident about was a gold outlook. Why are you confident about gold?
Look at what's happening in Bangladesh, Michael. Most people don't really care about what's happening in Bangladesh. Bangladesh has a population as much as half as that of the United States. It's a massive country with a massive population, and the country has already seen its best days. It has peaked in the past, and it's now in decline. Fanaticism and disruption will continue to increase in Bangladesh, and that will afflict India as well. Now, not that India will get the virus from Bangladesh, but India was itself falling apart already. So now you are looking at close to 1/5 of the world's population falling apart right in front of your eyes. And this is outside Ukraine and Israel and Palestine. So what you see, Michael, is continual disruption and destabilization in the world, particularly in the third world countries. There was a coup attempt in Bolivia. There have been problems in Ecuador. Latin America continues to degrade. So you see that the world is facing a crisis. And that is when gold becomes an extremely, extremely important part of your net worth, particularly when you trust globalization less and less. So you will trust your investments less. You will trust what you invest outside your own country or your own jurisdiction less, which means that gold will become an important part of everyone's portfolio going forward. And gold has barely kept up with inflation in the recent past.
Now, Jayant, the gold miners are supposed to be leveraged to gold. Still, I see that the gold miner index to GDX is up about 17% this year, and that's nearly the same as physical gold, which is up 18% as of August 7th. What's going on with the miners, Jayant?
That's the way it has always been, Michael. You can look at performance of GDX and compare it with GLD over the last 5, 10, 15, 20 years. And GDX fails to provide leverage to gold price. It, at best, performs at the same pace as gold does, or often underperforms. And the reason, again, goes back to what I was saying earlier. Driven by greed, we investors tend to overinvest in mining companies, which means that we reduce the cost of capital of those companies, and those companies are able to return us a lower rate of return on our capital. Now, this is not how it should have happened, but we are responsible for it. So yes, gold companies have not provided us the leverage, but this had to be the case. We overinvest in some of these mining companies. I tend to, Michael, as a result, invest mostly in junior mining companies where I actually see a leverage to, sorry, not a leverage necessarily, but a premium based on what they actually have in the ground.
Explain that a bit more. Why would the juniors be a better place to play?
Well, the reason is that historically, GDX, which is mining companies, tend to be overpriced. Brokerage companies, if you look at brokerage reports, they use target prices of mining companies based on a multiple of NPV. Now, to me, that is completely irrational. Target price should never be more than 1 times NPV per share. But they use 2.5 times NPV and use a horribly low discount rate. So mining companies tend to be over expensive usually. But at the same time, junior mining companies are not followed by big investors. Big investors and mining companies tend to stay away from junior mining companies until the very last days, which means that junior mining companies continue to struggle with their valuation. They are not, in many people, valuing those companies. And I want to operate in a market where competition is limited, where not many people are chasing the same stuff that I'm chasing. And that's where some of these companies in the junior mining sector tend to be undervalued compared to what it should be.
Now, what model works for assessing a successful junior, Jayant? There's close to 1,000 listed juniors on the TSX venture alone. Is there anything that you're looking for in terms of if it's a development project, management, particular geographic region?
So, Michael, when I talked about comparing GLD with GLDXJ, we should also compare GLD with the performance of the venture exchange. Venture exchange has fallen by 80% or so in the last 20 years. So its performance has been worse than that of GDXJ. The problem is that 80 to 90% of companies in the junior mining space are completely useless. They are lifestyle companies. So it is extremely important for an investor to pay attention to the quality of management. And that's where I pay most of my attention. I want quality management that is business savvy, that is value savvy, and that is reasonably honest. And street smart as well. So I pay most of my attention on the quality of management because that is going to ensure that the value in the ground is going to be created. And if there is value, it will be sustained. Whereas a bad management will destroy whatever value they might have in the ground.
Thoughts on M&A? We started off the year with some sizable deals in the gold space. Lately, it's been all copper. I think of the recent BHP Lundin JV, and then there was also Rio trying to take out Anglo.
Yes, and I hope those mergers return back to the market. There were a lot of mergers happening over the last 3-4 months, and they have calmed down a bit, particularly in the gold space. But at the same time, you see, the Filo being acquired by Lundin and BHP. So I hope new mergers get announced. But if they don't get announced, that will actually be a negative news for junior mining companies, because does that mean that there are not enough value propositions in the junior mining industry? So we have to keep a close eye, and I hope those mergers start coming back to the market.
Lastly, what's some of your favorite ideas?
One company that I quite like, that my clients and I are big investors in, is Irving Resources. It's a company in Japan. They are currently drilling at Yamagano project near Kokoshima. And they have a very good joint venture coming up with one of the biggest mining companies in Japan. So Irving Resources is one of them. It's trading at 32 cents. Another one that I have recently taken a lot of interest in is Florida Canyon Gold. The ticker is FCGV. It's trading at 47 cents, and there is an arbitrage of about 15 to 30%, depending on how you look at the merger that is happening between Florida Canyon and Integra Resources. So Florida Canyon, I think, is a very interesting play to look at.
John, thank you very much for your time.
Thank you very much for the opportunity, Michael.
My name is Michael McRae. You're watching Kitco Mining.